What do you do when the markets are flat? How do you trade? Can you trade? Is it safe to trade? Those are questions I'm going to answer in today's video. Hi, this is Lode with Black Bear Dog Trading, and welcome. So, what do you do when the markets are range bound? Range bound is a definition used that defines markets as having a specific high and a specific low, and they just never break out of that specific range. They don't go past the high with a breakout, they don't go past the low with the breakout. They're just like a horizontal band moving along. So how do you trade this? What do you do in such a case? Well, you do have several options. Option one is you can just simply, where do I go? Here I am. Option one is you can just simply stick it out, wait and see. But you don't know how long that's going to take, and nobody can tell you. Nobody. Not the experts, nobody. It can take from hours to days to months to years. Second option you can do is you can, as us Forex traders, instead of focusing on the main currency pairs, we can look for some odd pair to trade that may have more volatility. There's danger involved with that, but for the simple reason that you don't know how these pairs function. You're not used to trading them. They may have radical moves. One thing is for certain, odd pairs, they also have usually high spreads. So you automatically put more money at risk. Third option you have is you could trade a totally different asset. You could try your luck in stocks, bonds, cryptocurrencies. So, but there's a fourth option, and that's the option that I'm going to discuss now. Let's take a look at this chart. What we're having here is the Euro USD on the 1 hour chart, and a quick glance you can tell that while I'm in a trade, I got in today because we actually had some move today for a change, but other than that it has pretty much been flat. And let me just this is the wrong one, sorry about that. Let me get rid of this thing. Sometimes you just pick the wrong thing. So let me show you. You go right here, and then I take another one and I go right here, and sure enough, this is where the market has been kind of ranging back and forth for some time. Let's try a different currency pair, and we kind of have the exact same thing. Go right here, and we're clearly sitting in a range, and we're going right here. If I want to be a little bit tighter, right about there, and you can tell we're definitely flat. Let's try yet a third currency pair of the popular pairs that we trade, and again this one is definitely very obvious. So how do you trade this? You don't want to just jump in and willy-nilly and try to get in a trade, because you're getting frustrated and you will lose money if that is how you approach it. But there is a way that you can trade this, and you can trade it successfully, and in fact you have several options available. Number one, you can go to a lower time frame, and by going to a lower time frame you usually tend to have a little bit more volatility, which indirectly translates into the currency pair you want to trade moving a little bit more. Let's take, for example, I'm sitting at the 1 hour. Let's go to the 15-minute. There's a prime example right here. You could tell right now that this has definitely been, you see? So that's one option you have. You can go to a smaller time frame. The second option that you have is that you actually can trade the range bound in a specific strategy called the support and resistance range strategy. And the support and resistance range strategy actually is quite simple to do. First thing you need to do is to define the resistance level and the support level, and then within that you go and find trading opportunities. And I'm going to show you right here how you do this. So the problem that we're having is defining support and resistance levels pretty accurately without inundating our screens with lines. So I found a solution that has worked over the years very well for me. what I do is I shrink down my charts to the absolute tightest position I can get them, meaning I'm zooming out as far away as I can. Here we go. That's as far as this goes. Now I have a very clear view of where my resistance is right here, and I have an equally great view of where my real main support is right here. So this is where we had a breakout today. We had one a while back right here. Other than that, we're just stuck right here, nothing on the low side. This is how you determine support and resistance very accurately, and it works for every currency pair that exists. Just zoom out as much as you can to the absolute maximum, and then you see where the peaks are. And you don't need to go and define every peak. I mean, I don't need to go and here is one, okay, and then there is one. If I want to go a little lower, right around here somewhere, you don't have to do that. You can take majors, which I just did, the two outer lines, or if you want to do a little bit shorter ranges, then of course you can take the inner two lines, what I just drew up now. So with the support and resistance defined, so how do you trade this now? What do you do? Well, the concept is actually very simple. You wait, pricing is going up, you wait until price hits the resistance level, bounces back, and let me draw this so we can follow along. You hit until price hits, if price moves up until it's the resistance level, bounces, comes back down, and continues down. This is called the resistance bounce strategy, and the reverse is true for support bounce. You wait until price hits support level. In this case it went a little further, but then it bounced right back up and it continued on its uptrend, and that would be a support bounce. And you trade this then by immediately entering a trade, like as soon as you are one bar above the resistance level or one bar below the support level, that's where you enter the trade. So I would enter here for my sell opportunity, and I would enter here for my buy opportunity. Remember, they're bounces. So it bounces off resistance, meaning go back up. So that would translate in a buy. It bounces off, wait, let me rephrase this. It bounces off support. It means it goes back up, and that would be a buy. It bounces off resistance, and that means price goes down, and that would be a sell. Okay? So that's why from resistance it's called a resistance bounce, and from support it's called a support bounce. All right, once you're in a trade, the question then remains, how do you go about determining where you should put your stop loss and your take profit? And that's a very, very valuable question, because it's money. We're putting money at risk. So presuming, in this case, I know that's a little bit in hindsight, but bear with me here. I don't unfortunately have one to show you live right now. But presuming I had entered a buy trade right here, and sure enough, I went up and up and up and up. How far above my entry should I put my take profit? How far below my entry, since this is a sell position, should I put my stop loss? Well, you have plenty of choices. You go to the most recent low for your stop loss, which in our case would be, well, let me draw a horizontal line, it's easier to see, would be right around here. So that's where you should put your stop loss, and your take profit is actually very simple. Below the resistance level, not above. Because the guarantee that it will break through like it did here this morning, you have no clue, you have no idea. So you would put your take profit somewhere near this high right here, and I'm going to draw a bigger arrow, like around right there. That's where you would have set your take profit. And the reverse is equally true. Again, unfortunately, I don't have one to show you live because of the mere fact that there isn't one. But let me show you if the reverse was true and how that would work. So here we are, and we had a resistance level. It didn't go through. It retraced. It bounced down. So we're entering at this point, after the first bar closes, we enter a sell position right here. After the first bar close, and we just let this go. Okay, that's what we do. Then we set, once we're in the trade, we set our take profit and stop loss. Again, in this case, our stop loss is the most recent high, which in this case is right here. Now, I'll be very honest with you, that's a little tight, and I I never set my stop losses that tight, because there is a rebound, a retracement possible, and it means I would get triggered and I have a losing trade. So when this happens, like in this case, don't be afraid to go a little higher, like something like that. I know this is more visual than factual based, but I'm just showing you what I do. I'm not afraid to go a little higher. So, and then in the same time, where do I set my take profit? Well, again, the same concept as I showed you earlier. I set my by the lowest, not the lowest low, not by support or below support, because again, no guarantee that it will go through. And in fact, when you see it didn't go through, it went back up. So I put it from the bottom up to the most recent low, and it's not really the proper term, the second recent low, there you go, which would be here. So in total, this would give me a run from first bar closed, I enter, and this would have given me this kind of a run right here. This is how you can trade range bounds. And it's a very successful trading strategy. It's just a matter of applying the strategy, the rules of the strategy, which are very simple, very easy to understand. By the way, I've wrote a booklet that explains all this in detail, and you can download it from below. As always, no charge. So this is how you trade range bounds. But now, for those of you who are really not so good at putting in support and resistance level, you still doubt your, oops, that's because I'm in a trade. I don't know how I'm going to get rid of this line, but we'll see. So for now, I guess I'll leave it. Let me try once. There we go. So now, for those of you who are not so good at trading, putting in support and resistance level, even with the chart completely zoomed out and you literally have a bird's eye view, there is a tool you can use, and it's called the Donchian indicator, or Donchian, however you pronounce it. And let me install it here on my chart, and then I give you a link below as well where you can download that. It's free. All you have to do is just download it and install it in your indicator directory in MT4. And let me install it now. I already have this. I'll install it on my chart Donchian channel. We leave it at 20. We don't change. And colors, that is totally up to you. The support level is the reddish color, tomato, and the resistance level is the bluish color, Dodger blue. We leave that, you change it to whatever you like. Here we go, and now you see lines here being drawn. This is automatically the highs and the lows of the price, where it's been moving. And now you can see very clearly that we most definitely are sitting in a range bound. Look at this right here. Here's another one right here. I mean, it is as clear as apple pie right now. So use this, and you'll have an additional benefit with it for determining where you want to put your stop loss and where you want to put your take profit. So let me walk you through this right now. With the Donchian channel installed, or the Donchian indicator installed, I now easily define my resistance level here, and I define my support level, right, the last one, the biggest one, right here. There we go. And now I look for a trade in between these two zones right here. Once I'm in a trade, and let me go back to the trades we just did. Price went down, it hit the resistance level, it bounced back, and it went up. I used the exact same concept, but it's a lot easier to determine. I put it below my stop loss will go below the next Donchian support level, major support level, and my take profit will go at the last Donchian resistance level before the resistance level I drew in. Sounds complicated, it isn't. So I entered the trade right here, a buy trade, I'm going up. So now I put my stop loss at the most important Donchian level just below, which is about right here. That's where my stop loss goes. My take profit, I put at the at the last Donchian resistance level before the resistance level I drew in. My yellow line is the level I drew in. The last one is right here. That's where my take profit goes. So now if I go back to my trade and I entered it right here, I went all the way up to here. A nice little trade there. And the same concept applies with if I go for a sell opportunity, and let's run through that again too. Let me get rid of these lines real quick, otherwise it gets too confusing. There we go. Okay, I have my Donchian lines all going, my channel, and I can clearly see my resistance, latest resistance was here roughly, and my latest support was about right there, give or take. Doesn't have to be 100% accurate. So here we have the same concept. Price moved up, but it didn't go through resistance. Instead, it bounced back. So on the close of the first bounce bar, I enter a sell position, which is right here, and I go sell. Now, where do I put my stop loss and where do I put my take profit? It's the exact same concept. In this case, if I were to go to the next highest high to put my stop loss, which would be right here, that's too far of a distance and we're risking too much money. So I don't do that now either. So what I do is instead, again, I use a visual, and if there is no other high resistance level besides the one I just showed you, then I merely put it, again, more visual than anything else, but about right here, and that will cover my back. And then with the take profit, it's the exact same concept. I take the next high, the next low, we're in a sell, the next low before I reach the resistance, the support. I keep mixing this up. Before I hit the support level. And in this case, that would be right. You see this? You see this one right here? Now I don't need to be this way. If I'm happy with a little less, I can actually go up to there, because that's a little bit of a stronger support level since it has more hits. So more than likely that's the one I take. And now if we look at my sell opportunity, which is still a nice run, I entered it here and I went all the way here. So these are the two ways that you can trade a range-bound forest market. You can do with the support and resistance bound strategy, setting your own support and resistance levels. If you're good at doing that, you don't need to install another indicator. If you rather have a little bit of help because you're not 100% sure, here I showed you how you can do the exact same thing with the Donchian channel indicator and how to use it. And again, you can download that indicator. The link is below. It's not my site that you're downloading it from, but it's free. You don't need to sign up. You don't have to pay for anything. It's 100% free. All you have to do is install it in your indicator directory in MT4 platform, and then upload it on your chart. And if you don't know how to do this, that's actually quite simple. With your charts open, simply click on File, go to Open Data folder, and I should get rid of this line because it's annoying, and click on MQL4, and now you see indicators, and this is where you would put the download, and here it is, Donchian channel. Okay, and then you just load it onto your chart. This is it with how to not dread range bound markets when you don't know when they will come to an end, and how you can still successfully trade them without getting complicated or nervous or anxious or making mistakes because you're in quote unquote unfamiliar territory. In this case, what I've shown you, the only new aspect that I introduced is the Donchian channel. Other than that, the trading aspect is exactly the same. We use support and resistance levels, and based on that, we do our entry. All that is required on your part, patience. Don't jump the gun. Do a lower time frame, like right now we were on the M15. Go with a lower time frame, but you can do this, by the way, on every time frame. If you like to go trade your usual time frame, same concept. We would have had a trade here, we would have had a sell here, we would have had a buy here before the breakout took place. It's the same concept, just realigning a little bit. This is it. I hope this was informative for you. Don't forget to download my ebook that comes with this part of the video. It's yours free. Link is below. And take care of yourself. And as always, God bless.